Here we have the daily price chart for Palo Alto Networks Incorporated, stock ticker PANW. We can start here by looking, kind of pulling out to a longer term chart view here. So we can try to take a look at what the broader picture is telling us with this stock. As we can see, there have been some periods of extremely volatile trading activity. For example, we have an extremely large price gap, which was posted previously. Specifically, this would be roughly the middle of February, where we saw prices, post a tremendous price gap lower. But then since then, we have managed to post a fairly stable recovery. And there are a few reasons to believe that, this recovery should continue to be stable in nature going forward. In particular, to begin with, we can look at the rising indicator reading in the relative strength index. That would be the purple line shown down here. Here we can see that upward momentum really has been in place ever since this massive price gap occurred during February. And this is encouraging for the stock going forward because it does suggest that this upward trading activity is being confirmed by the indicator readings themselves. In addition to this, we have spent most of the trading history here post gap trading history, trading above the exponential moving averages. This break higher really occurred during the second half of April, and we have seen some brief dips below here, below most of the exponential moving averages, not all of them. The 200-day exponential moving average has not been tested very much, except for this short-term period here in the early parts of April. But for the most part, we have managed to hold above this exponential moving average cluster, and this is an important time period to be watching in terms of moving average analysis because these are daily readings here, and the fact that the stock has managed to hold above these levels is encouraging for the stock going forward. So currently, if we're looking at this kind of gapping period lower as the current influential trend, we can see that the stock has managed to break through most of its important Fibonacci retracement levels. To begin with, we did see some quick moves higher almost immediately. We really did see the 23.6% retracement and the 38.2% retracement give way relatively fast. This occurred before the end of February. We did see a bit of a break here above this 50% retracement level, but we did not see an initial close below there. And then we did reach a failure point really just ahead of the 50-day and 20-day exponential moving averages. And this did force prices a bit lower, almost to the point where we were retesting the prior lows. So here, this would have been the central buying opportunity here. This would have occurred during the early parts of April. So from here, we have seen some fairly strong, stable price movements higher. A bit of a difficulty again, reaching through the 50% retracement, and it did take several attempts here in order to get through this level, but ultimately we did see a push higher, and this did help prices to ultimately break through the 618 retracement as well. We did see a bit of a price gap here when that move actually occurred. So we can kind of move in on this here a bit here. So, we have closed above the 618 retracement. This doesn't really leave much left in terms of potential Fibonacci resistance levels if we're using this price zone here as our defining trend move. We have not yet broken above the 78.6% retracement, which currently comes in at 355.28. This will be a significant level to watch going forward because it really is the only line in the sand here that would be preventing the stock from retesting these prior highs for the year, which came in during the February 9 trading session at 380.84. So, we can see here, this is a fairly significant level of resistance. It did precede this price gap lower by a relatively short period of time. I mean, we reached these highs and then, the market drastically changed its mind on the stock quite quickly. But, the recovery here so far has been stable. I would point to the 20 day exponential moving average as a primary level of support here. As we can see, the stock has managed to find support there on several occasions. In other words, the stock really is kind of behaving itself as it moves into this region. We can see a few different examples of this. So a break lower from here, below this indicator, could suggest some possible headwinds for the stock. I mean, it would force us back into the moving average cluster. I never feel great about trading inside of the moving average cluster. I feel like sometimes it can be very difficult to get out of that region. Once you're caught in there, you sort of ping pong back and forth between these moving averages. But as long as the share prices themselves can maintain themselves above this 20-day moving average, the forecast here does look relatively favorable here going forward. What we should note here is the fact that the stock did manage to recover itself quite quickly after last week's share price movements lower. There were several major technology stocks that kind of fell victim to the downside selling pressure that was seen in the market as a whole. The S&P 500 dropped fairly significantly. We saw a lot of selling pressure in the NASDAQ. We saw a lot of selling pressure in the Dow Jones Industrial Average. But for the most part, the stock did a fairly good job of recovering its gains after these initial losses occurred last week. So we can see this red candle here was a Thursday trading session, and then we haven't quite recovered all of the gains yet, but we're most of the way there in terms of recovering the price losses that were seen previously. So this does place the stock on a fairly strong footing compared to some of its technology counterparts. I mean, if we're looking at some of the stocks in the Mag 7, for example, there's been a bit of a mixed history here, mixed results that have been seen since this Thursday trading period. Some stocks have managed to recover most of their gains. For example, Apple has managed to recover most of its gains. But companies like Facebook, Meta Platforms, has not been able to do this. And for this reason, I do believe that we're probably likely to start seeing a bit of a divergence here within the tech sector itself. If we do start to see sell-offs in an overbought market, I'm starting to believe that we're less likely to see uniform price trends within the technology space as a whole. I think winners and losers are starting to emerge here, and I would like to hear comments from people about which stocks they believe are most likely to start performing better than others, which stocks within the technology sector are likely to be the winners throughout the rest of the summer trading period versus others. Some early examples here, you would have to put Meta Platforms in the loser category so far, because at least after Thursday's trading period, we're still roughly trading near the lows in that stock. But with the share price activity that we've seen in companies like Apple or Intel or even Palo Alto Networks here, we can see some examples of stocks that have recovered most of that selling pressure, most of that downside trading activity. So I would like to hear in the comments below if you think that Palo Alto Networks does qualify as one of the winners in this category, and who do you think will ultimately be the winners and the losers in this space throughout the rest of the summer. So here's the current market update for Palo Alto Networks Incorporated, stock ticker PANW.